So last week, we were able to ascertain that the balance sheet is a statement of financial position that mainly presents the assets, liabilities, and capital of a business. So I was able to give you the format. We discussed them thoroughly. Initially, I give you the skeleton that you begin with your fixed assets, you look for your working capital, which is current assets minus current liabilities. And then you get the net total assets by adding the working capital to the fixed assets. Right, so the extended version is when you begin with your fixed asset list, your assets, note that as we buy assets, their value fall or decrease, and that's depreciation. And the question will give you depreciation if there's anything of that sort. Okay, after that, you look at the final section, which is your finance by, and that is where you put in the capital, any additional capital, as in any resource that the owner has invested. You add on the net profit or net loss you get from your profit and loss account. You less drawings, as we all know drawings to be the resources the owner has taken for personal use. And then finally, you add the long-term liability, which is the loan. So that is the balance sheet we went through the last time. Just for a quick recap, the extended version, we listed some of the fixed assets, as you all know: land and building, fixtures and fittings, motor vehicles, we have plant and machines, equipment, you know them, as well as the intangible ones like goodwill, copyright, or investment in shares, etc. Then for your current assets, we paid attention to these 6: your closing stock or inventory, your debtors, prepaid expenses, accrued income, bank, and cash. For the current liabilities, we saw the creditors, bank overdraft, expenses accrued, and then the income prepaid. Okay, so let's apply this knowledge in solving the first illustration. So you remember from last week, we prepared the trading profit and loss account for this question. And if you remember, we got 3,170 as the net profit. So today we want to prepare the balance sheet. Okay, can we begin, Prof. Sandra and Prof. Frank?
Yes.
Okay. So the title of the balance sheet is the first thing you put in. Balance sheet as at. So here we are being told we are to prepare it for the year ended, or the year ended in 31st December. But the balance sheet, we're going to have it balance sheet as at 31st December 2002. Okay, so you put in your currency sign, which is Naira. And then per the format, you begin with the fixed assets. So dear professors, you go through the question and pick out your fixed asset. You have to show the cost, the accumulated depreciation, and then the net book value, or NBV. So let's go through the question and see if we can pick up these information. Okay, Prof. Alexia is here. Prof. Alexia, you are welcome. Okay, so let's go through the question and pick all the fixed assets that we can have in the question. So please, as you read, if you see any fixed asset, you can prompt me. So it's very important that you take your time and go through the items one by one, so you fish out your fixed assets. So if you have seen one, please prompt me and tell me about it. Or do I need to call names? So Prof. Alexia, we are starting the balance sheet, and as we saw from last time, you begin the balance sheet by looking for your fixed assets. So we are looking for a fixed asset in this trial balance given here. So please, if you can see any fixed asset, let me know. If you can't see it, let me know. Say there are no fixed assets. So who is ready to give it the first hit? Okay, let me call Prof. Frank. What is the first fixed asset you are seeing?
So the loan from bank.
The loan from bank. Are you sure it's a fixed asset? We said fixed assets are resources of a business, right? So when you take a loan, and all assets have debit balances. So use these to consider. And I think the loan cannot fit for a fixed asset because a loan has a credit balance in the first place. So that even disqualifies it from being a fixed asset, an asset, and for that matter, a fixed asset. So Prof. Frank, okay, maybe you are thinking from the view or the perspective that when you get the loan, you are getting money, right? So that money goes into cash, but the loan itself is a liability because you are owing the bank. Okay, let me go on to, or you want to go give another try?
So premises.
Okay, so premises is the first fixed asset in this question, premises. And premises here is just like a building. Okay. Any other? So any other fixed asset you see? Yeah, Prof. Alexia.
Simply shop fittings.
Thank you, shop fittings. So just for the records, I think last time I tried to show you all the possible fixed assets that you can look at when it comes to the sole trader. Oh, okay, I think I didn't share that in the group. Yeah, my bad. Okay, but I think we listed, let me see if it's here. No, it's not here. I'll share them later in the group. Please, if I forget, do remind me. Nowadays, I have a lot on my table. So, okay, so if you go through the trial balance, see stock, this is the opening stock. Stock is an asset, right? But not a fixed asset, it's a current asset. But in the balance sheet, we only consider the closing stock. Okay, the opening stock is used in your trading account. Now, purchases, as we all know, we use it in the trading account. Sales is not even an asset because it has a credit balance. Sales is a revenue. Rent is an expense. Wages is an expense. Telephone expense. Carriage invoice, we use it in the trading account, it's an expense. Interest on loan is an expense. Premises is an asset. And what type of asset? A fixed asset. So that is the first fixed asset we have. If you look at the amount involved, the cost is 9,000, right? And in this question, there is no depreciation. And I've explained depreciation to be the fall in value of a fixed asset. And you've all experienced depreciation before. You buy a school bag and years after, the bag starts tearing and wearing off. That's depreciation. So if the examiner wants you to bring in depreciation, he or she is going to give you details about depreciation. So in this question, you don't see anything depreciation here. There's no depreciation, right? Unless I'm not seeing well, but I don't see any word here, depreciation. So it means the assets were not depreciated. In that case, you can avoid writing cost accumulated depreciation. You put the value under the net book value straight away. However, you can also decide to put the cost there, and under the depreciation, it will be 0 or dash, okay? So that is for, but you can put it straight under the third column. Okay, after the premises, the next one is shop fittings. So shop fittings. So the fittings in the shop, these are also assets, 8,000. That one too has no depreciation. The next item is debtors, and as we know, debtors are current asset, not fixed. Carriage outwards is an expense. Bank cash, these are current assets. Okay, capital is not even an asset. Drawings will go to the balance sheet. We have decided on the loan. Creditors is a liability. Return inwards, return outwards, we know these things. Discount allowed, discount received, we know them. So their fixed assets are only two. Only two. So let's add them together. We get 17,000. And that 17,000 represents the total fixed assets. Total fixed assets. Total fixed assets. So when we say you begin the balance sheet by listing your fixed asset, this is what we're referring to. Go through the question and determine all the fixed assets in the question. Okay, please, any question or any issue before I move on? Any problem? Let me see if I can find this. So if you have any issues with what we've said so far, please let me know. And then we can, okay, so this is the list I was referring to of all the possible fixed assets you can come across under the sole proprietorship. So we have the land and building, we have the fixtures and fittings, motor vehicle or motor van, plant and machines, equipment, furniture. You see, one thing is that when you see the item, ask yourself, is this item a resource or a property? Is it a property of the business is using to generate profits? Okay. But these, for your level, these are the fixed assets that normally they put up. So for the intangible ones, we have copyright, goodwill, patent, trademark, investment, leasehold, freehold. Okay. So these are your fixed assets. So it so happens that in this question, we only had the premises and shop fittings. Okay. After that, the next thing per the balance sheet format is to go with your current assets. So you have to go through the question and fish out all your current assets. So dear professors, can you do me the favor, or Anna, and tell me about the current assets?
Debtors.
Okay, thank you very much, Prof. Sandra. The debtors are current assets. Is that the only one, or we have more? Prof. Frank, since Prof. Sandra has given us one, can you add on? Oh, I think today the network is not favorable for my professors. Okay, Prof. Sandra, apart from the debtors, do you see any other current asset?
Bank and cash.
Okay, the bank and the cash. Okay, that's good. Is that all? Okay, I think you have done well. So let me leave you to rest more. But per the list we have here, if we are looking at our current assets, it's always important that you arrange them in the order of liquidity. Order of liquidity. When I say that, I mean, you see, these current assets are resources that are expected to be converted into cash within one financial period. Okay, so we call them current assets because we expect that we can turn them into cash easily. So when you are listing your current asset, you have to list them in the order in which you can easily convert them into cash. Okay, doing it in an ascending order, as in you start with the one which is difficult to convert into cash. Then you move to the less difficult until you get to the final one which is easier. So if you look at the list here, on top of the list is stock, because stock is difficult to convert into cash. Why? Because you have to first of all sell them, and when you sell them, some of the customers may not even pay, right? They become debtors. You now have to chase them for the money. Okay, so it takes time for you to convert stock into cash. So stock is less liquid. Okay, it's less liquid because if you are converting it into cash, it takes some time. Wow, I think I have to pause and see if this network will be very stable for us. When you are listing your current assets, you have to do it in what we call order of liquidity. Okay, where liquidity means how quickly you can convert that asset into cash. Okay, so in fact, in realistic terms, cash is the more liquid asset because it is already in cash. Right? So when you look at stock, if you want to convert stock of goods into cash, you first need to sell them. Okay, the customer may not even pay instantly, will pay you the next month or anything. So you see that it takes time for you to convert stock into cash. If somebody is also owing you, that's a debtor, it will take some time because the person may be tossing you, I'll pay next week, I'll pay ending, whatever. Okay, so we arrange our current assets in order of liquidity, as in the order of how quickly we can convert it into cash. So on top of the list is stock. Stock is very difficult to convert to cash compared to debtors, compared to prepaid expenses and accrued income. Finally, bank, and then the liquid asset itself, cash. Okay. So when you are listing them in the balance sheet, that should be the order. Begin with the stock, followed by the debtors in that order. If you mix them up, you will not be marked down, but you may lose some bonus point. Okay, Prof. Sandra is back. So, Prof. Sandra, I was making the point about the liquidity, as in presenting your current assets in this manner. So you begin with the one that is a bit difficult to convert to cash. So stock is the most difficult when you compare all the current assets. Stock is the most difficult to convert to cash. So we say it is less liquid. Okay, and I've explained that if you have stock of goods, let's say you are selling shoes and you have shoes, for you to convert that shoes you have into cash, you have to go to the market, sell it. In fact, you have to even look for customers who are going to buy. So you see the time. Some will not pay, they'll pay another time. So stock is not easy to convert to cash. The next is debtors, right? Compared to stock, debtors are easily convertible into cash, right? Then followed by prepaid expenses, accrued income, then your bank, and finally cash. So cash is the most liquid asset. Sometimes we refer to it as a liquid asset because cash is already in cash, right? So let's go to the question and see if we can list our current assets. So the first current asset is your stock, which is the closing stock. So you bring that one. So our closing stock is 2,550. You put it under the second column. After that, you look for your debtors, right? So for your debtors, we are given 1,500 here for our debtors. Then after that, the next on the list was prepaid expense and accrued income. Please, if you check this question, there's nothing like prepaid expense or accrued income. We don't see those things here. So we move to the next, which is bank, and then cash. So our bank figure is 2,050, and our cash is 1,150. So that is all. So you add them up. You add them up and get your total current assets. Okay. So you see that you really have to take your time and pick these items into the balance sheet, right? Okay, so dear professors, I think this session is almost up. Let's rejoin, continue with getting the current liabilities to get the working capital, and then consider the other aspects of the balance sheet. It is understandable if you are struggling now because this is our first illustration, but in order for you to overcome it, ask me any question, confusion you have so that I can clear it for you. So let's join the next session and continue. Thank you, dear professors. Anticipating your presence in the next session.